Hello, and welcome to myfinanceteacher.org. As usual, we're going to look at a range of assets in this video, which are going to be precious metals, general stock market, and energy. I really enjoy sharing my opinion with you, so thanks for watching this video. By the way, if you're interested in more frequent and more detailed analysis of a range of assets, why not join us at myfinanceteacher.org. Among more recent news of what's been happening with the members is we've entered this nice trade on Ethereum a couple of days ago, and by now are just only a couple of percentage points up, but I think there is a nice potential over there. So let's get back to gold in this instance. So far, gold has been doing pretty well, and it's been doing well all the way since early June. The ongoing short-term daily cycle so far has been going on for 45 days already. We've seen a couple of pokes through the upper range of the Bollinger Bands within the ongoing cycle, and although I do think that over the next few days we probably might see another poke through the upper range of the Bollinger Bands, maybe with gold reaching somewhere around 1,830, something like that. And although I'm still holding a sizable allocation to precious metals, since my previous videos, my allocation hasn't really changed. It's still at about 87% allocation in the precious metals related part of the portfolio, meaning I have only around 13% cash in that part of the portfolio, but I keep raising my stop losses as gold creeps upwards on all of my gold related assets because I think it's getting a little bit late in the ongoing short-term daily cycle, and we've already seen the 14-day RSI poke slightly into oversold area in early July. And coming back to these short-term cycles, they usually last for somewhere between 1.5 to 2 months. Of course, they can stretch for longer than that, but that's the usual duration. So what I think is likely to happen possibly over the next, let's say, a week or so, we might see a poke above the upper range of the Bollinger Bands again on gold. And the repeated poke is usually a sign of a turnaround in the asset. So over the next few weeks, that would be somewhere into early August, I would actually expect gold to drop significantly. A round number that comes to mind is $1,700. If that happens sometime into early August, that will actually give us a 2-month cycle that's just close to the usual duration. Of course, that might stretch for a while, but that's my general expectation for gold. So I and the members at myfinanceteacher.org, we keep raising our stop losses on a range of assets to protect the gains that we've had so far, all the way since March. Next, let's have a look at Optimism Index on gold. That's from Sentiment Trader. To be honest, not that much change since the couple of last videos. Although Optimism Index did dip a little bit below extremely high optimism, it's still pretty high. So gold, I think, is pretty close to its intermediate cycle top. So generally, although I am still holding, as I mentioned, it is time to be somewhat cautious rather than time to jump into precious metals. Next, let's have a look at GDX. If gold pokes through the upper range of the Bollinger Bands one more time over the next week or so, GDX might actually do the same, although it's already at resistance at about $39 if we look all the way back to the middle of 2012. As I mentioned in some of my older videos from several weeks or maybe a couple of months ago, that was our target for GDX, to reach this resistance zone just somewhere at about $39, and that's where GDX is at the moment. So again, time to be cautious. And I, as well as the members at myfinanceteacher.org, we do keep updating our stop losses to protect the gains. Next, let's have a look at silver. Silver is finally outperforming gold. Again, as I mentioned in some of my older videos, silver usually outperforms gold somewhat later in the intermediate cycle, whereas it tends to underperform gold somewhere in the early parts of the intermediate cycle. As we mentioned before, the resistance zones on silver were $18.9. Obviously, silver is above that. And the next resistance zone is just a little bit higher than the current price, somewhere at about 19.6. And just like with gold, I think it's likely that silver does break a little bit above that, maybe to come close to the upper range of the Bollinger Bands over the next 1 week or so, but it's getting a little bit risky. If you look at 14-day RSI, it's been into overbought for a short while in mid-August, and it's getting close to entering that overbought area again. So momentum is still good on silver, but I think it's going to get overheated relatively soon. Next, looking at the optimism index for silver, we again see that it's time to be cautious. Although the optimism index is not into extreme optimism, but it's not often that silver actually reaches that high. So rather than above the red line, as we see for gold over here, for silver, even coming close just under the red line is already getting somewhat hot. So time to be cautious. Next, looking at crude oil, and oh my, crude oil is just going sideways. I think a strong breakdown is possibly coming, especially if health concerns become a more serious issue sometime into the end of summer. And after all, since April, crude oil did gain quite a lot. Bollinger Bands are really tight, which usually indicates a violent move coming, and given the nice rally in crude oil since April, I think it's more likely that crude oil wants to cool off a little bit rather than give us a violent move further into a continued rally. Although personally I am holding some energy companies at the moment, as I mentioned to myfinancesteacher.org members. Again, I keep a tight stop loss on those energy companies, and we're actually going to look at that in a minute. Next, let's have a look at optimism index in crude oil. It's also basically relatively neutral, with crude oil going sideways over the last several weeks. So although a push up is possible, as the sentiment is not extremely optimistic, but still, it's usually a much better entry point when optimism is quite low. When people are afraid to touch crude oil, that's the time to enter. So on crude oil, I'm actually waiting for a nice entry opportunity with a possible spike down coming sometime by the end of summer, I think. Next, looking at the general stock market, S&P 500. I think S&P 500 is in an ongoing short-term daily cycle that's been going on for 18 days so far. These usually last for a couple of months, so I think there is possibly a couple of weeks of an upwards momentum in S&P 500. We see that over the last few days, S&P is trying to break above this resistance zone formed by the recent tops in the beginning of June and the lows from late January. So as the ongoing short-term daily cycle is still relatively young and the 14-day RSI is not that close to overbought area, I think there is still potential for S&P to move higher for a short while, maybe a couple of weeks. Unfortunately, as I mentioned in my previous videos, I was stopped out from the general stock market here in early part of July, and I haven't re-entered since. But I am holding XLE, and while crude oil is going sideways with the risk of moving down, on the other hand, if S&P 500 continues to trend upwards for another 1 or 2 weeks, there is still potential for nice gains on my energy position. Next, looking at optimism index for S&P 500, we see that we're into extreme optimism. So again, although there is a very short-term potential for higher prices on the general stock market, the intermediate cycle is probably past its midpoint. And again, if we see health concerns become more of an issue, there might be a correction into the declining phase of the intermediate cycle sometime into autumn, giving us a usual duration for this intermediate cycle of around half a year. Next, looking at smart money confidence, again for S&P 500, and we see that since February this year, smart money confidence is basically a mirror image of what's happening to the general stock market. So you actually want to buy when the smart investors are very confident, and at the moment they aren't very confident to enter into huge positions at the moment. Again, there is still some potential for this indicator to slide down and for the general stock market to rise a little bit. Although I don't think this potential is huge, so I don't want to re-enter at the moment. I'd rather wait for a nicer entry opportunity. Next, looking at the CNN's Fear and Greed Index. Again, over the last few years, stock markets have topped when the Fear and Greed Index was anywhere between 70 and 90. At the moment is at about 63, which is not high enough to give us a definite top tomorrow. So again, we might see stock market trend upwards for a short while, but it's nowhere near low enough to confidently enter the stock market. You really want to enter when this fear and greed index is at about 30 or lower. And lastly, looking at XLE, I do have a position in XLE together with the members at myfinancesteacher.org. And again, although crude oil is just going sideways after energy companies underperformed crude oil and broke through the lower range of the Bollinger Bands recently, I think there is a chance for this ETF to rise a little bit together with the rising general stock market. But I think over the next short term, I probably want to get out of this position with relatively modest profits. And the last thing I wanted to have a look in this video, but unfortunately I gotta run, is a 25-week return indicator for silver. Thanks, Nick, for your suggestion to have a look at that as we did for gold, and I promise to look at that in an upcoming video. For now, I wish you a very enjoyable day, and before you go on with your day, remember to hit that like button, subscribe to the channel if you haven't, and good luck in your trades.